Hi, welcome back to the channel. Thanks for being here. Today, we're going to talk about how much house can I actually afford? And it's a very simple formula. It's a very easy calculation that everybody, including yourself, can do on their own time or at home. You actually don't need me to tell you how much house you can afford. However, we get that question a lot. So today, I want to give you the secret. I'm going to give you the formula on how this works. Now, it's kind of catchy or tricky because sometimes people may only want a payment of, say, $2,000, but they don't even realize they qualify for $6,000 a month. Then there are the people who want to buy a house that would cost them 4 grand a month and they only qualify for 1,500. So this is a great way to figure out where you land on that spectrum and how close you are on the borders and the boundaries of qualifying based on the different programs. So, this isn't a pitch for which program to go to. This is simply information and education on how to calculate what the maximum housing payment you can get per program. And then you need to talk to me or another professional in the industry to kind of help you figure out what's the best plan for you. So, debt to income ratio, you've probably heard of that at some point. It's an acronym is DTI, and that's what we use to figure out how much you'll qualify for. So here's the formula. Here's how it works. Here's the secret, if you will. So take a look at the screen. Let's start off by first addressing your gross income and what that means and what we qualify off of. So notice gross income. This means before taxes, okay? Before any taxes are taken out, before you pay utility bills, before you pay 401k contributions, benefits, Social Security, Medicare, whatever. Gross income, top line of your budget. This is what you get before any deductions that come out of your paycheck. So all qualifications, this is important. We qualify based on monthly income. That's how we figure it out and qualify you and whatnot is monthly income. So keep that in mind. Right here is a little grid, a little chart. So here are the different ways. Now, I'm not getting into commission and overtime and all that. That's a lengthier discussion and conversation. Self-employed is the same way. Maybe I'll do videos on that down the road. If you want to have a conversation about that, just email me on the side, chad@chadwickanderson.com, or drop it in the comments or DM me, whatever the case may be. And we could look at your specific scenario. But for now, and I'm going to get rid of this real quick. All right, so let's start here. If you're an hourly employee, this is the calculation. It's very, very simple. Let's say you make $20 an hour. Well, how much do I qualify for? Well, if we put in $20, here's the deal. If you worked 40 hours a week, 52 weeks a year, and you say, well, what about holidays and things like that? Holiday pay is included in that, but I have PTO. PTO is included here. Sick days included here. If you're working or getting in some way, shape, or form pay for 40 hours a week and you multiplied 40 by 52, there's 2,080 work hours in a calendar year. So you would take $20 times 2,080 hours, and you would divide that by 12, 3,467 a month would be your gross income. Now, if this varies, if let's say at the end of the year, you tally up all the hours and it's only 1,987, well, that's a different number. So when you're working hourly, you can't just go, oh, my rate 28 times 2080 divided by 12, because if you don't work the full 40 each and every week, then the underwriter will catch that and they will deduct from your qualifying income. Keep that in mind. Now, what if you get paid salary and it's weekly and you say, hey, I get paid $1,000 a week for my salary? Okay, well, there's 52 weeks in a year. So 1,000 times 52 divided by 12, here's your number. Biweekly. This one tricks people sometimes. So if you get paid every 2 weeks, well, there's 26 2-week periods in a year. Not taking this number and multiplying by 2, that's different. That's semi-monthly, which is the next line. So if you get paid bi-weekly, let's say it's $1,750 every 2 weeks, then here's your gross income because you multiply by 26 and you divide by 12 for 3,792. Now, semi-monthly. This one and the next one are very easy. You get paid twice a month. Let's say it's $3,000. Well, you get that twice. There's 6 grand for the month. And of course, if you get one check a month, that's obviously the easiest. Let's just say it's 5,000. You get paid one time, so $5,000 per month. So, for the sake of this example, let's go with the semi monthly guy right here or girl and say that you got $6,000 a month in total gross income. Now, some of these formulas are populating. Do your best not to keep your eyes on those for the moment. And let's look at monthly payments next. So, here on monthly payments, here's the deal. We do not care what your balances are. It doesn't matter. Just don't care. All that matters to us is your minimum monthly payments, not what you pay per month, not if you pay extra, not if you do above and beyond and you're an overachiever. Nope. All we care about are the monthly minimum payments required on your credit report. We don't care about utilities, cell phone, internet, groceries, television, none of that. All we care about is monthly minimum payments on your credit report, and the application will ask if there's any undisclosed debt, maybe like a private note or something you pay every single month. We're not looking necessarily at childcare, but just some other loan or credit that you have to pay. So here are some examples. This is just the old standard American here. Auto loan, $30,000 balance, $650 a month payment. We get a lot of times, oh, well, Chad, I owe 30,000 on my car. I owe 7,500 on this credit card. I owe 4,000. Doesn't matter. We're only looking at your payment. Keep that in mind. So auto loan, 30 grand, 650. Couple of credit cards here, 7,500 on one means 125 for the payment. And terms could obviously vary. I'm just ballparking here. $4,000 balance, $50 a month. Student loans, 35 grand. Depending on the program, sometimes it's 0.5% of the balance, which would be 175. Sometimes it's 1%. Sometimes if it's like VA, it's even less than that. And there are other ways around this as well to have it lower. So again, that's one we just have to talk about, but you can assume 0.5%. That's pretty safe in most cases. And then, hey, Target, 1,200 bucks on a credit card there, $40 payment. This all adds up to $1,040 per month on your monthly minimum payments for your debts. Okay. Now let's move to the last section, program qualifications here. So here's the program conventional loan. Your max debt ratio that conventional will allow you to qualify for is 50.49%. That's Freddie Mac, 50.49%. And the max debt on this means that if we took $6,000 of gross income and multiplied it by 50.49%, the maximum total debt we could carry would be $3,029. But then you have to say, okay, that's the max debt. What debt do I already have? Well, you already have $1,040 a month in debt. So that leaves your buying power at $1,989 per month. But remember, the $1,989 needs to include principal, interest, property taxes, homeowners insurance, and homeowners association, HOA dues, if there are any. So everything has to fit underneath 1989 to make that work. FHA, a little bit more flexible. You can go up to 56.99. Makes your max debt 3419. That means your buying power is a little bit stronger with FHA because the debt ratio, the DTI, max debt to income, is a little bit higher on the threshold. VA is unique. It technically does not have a max. There is no max. VA focuses more on residual income, which is a completely different calculation. Now, VA will look at certain things like your DTI, your debt ratio, and they'll look at your credit score and they'll look at some other things to determine your credit worthiness and what kind of risk they're willing to take. We've seen people at 48% be told no because their credit was poor. We've seen people with a 70% debt ratio be told yes because their credit was outstanding and their residual income, again, different calculation, was excellent. So USDA, typically around 45.99 is a good rule of thumb. 2759 would be, or is the max debt there, which leaves your buying power a little bit less at 1,719. Now, there are other programs. There's jumbo, there's down payment assistance, there's what's called non-QM, there's bank statement loans, DSCR, all kinds of different things that are out there. But these are the four most common loan types. So I wanted to focus on those and give everybody an idea as to how that works. So If you pull out your pay stub and you go, okay, I'm a biweekly employee and I get paid $2,500 every 2 weeks, that means my income is 5417. So I put 5417 here. You can add up your monthly minimum payments, whatever those are. You can just get those from your credit report, and you can get a free annual credit report once a year that won't give you a score, but it'll give you your debts. Or if you just know them off the top of your head or can remember them, or sign up for a service and get a credit report, or call me and I can get you one. I have to charge you, but I can get you a credit report through a loan application, and we could look at that together. And then you can plug that number in, and then this chart here would tell you, hey, this is how much that I can qualify for. So I hope that math helps. I hope that opens your eyes a little bit, gives you an idea. Also, just helps you self calculate. If you want to take a look at it and just kind of put some pencil to paper and say, ballpark, what can I qualify for? Then that's the best way to do it, and how you can figure out. Now, some of you may go, well, wait, how much house is $1,700 a month? That's a trick question, because you could take the national average for interest rates. However, property taxes are going to vary state to state. Insurance is going to vary by age of the home, condition of the home. Property taxes will even vary county to county. HOA dues could be higher in one location than they are in another. Um, Whether or not these loans have PMI or MIP. So there are a lot of different variables and elements that go into it, but this will at least tell you kind of a ballpark of, hey, how much payment can I afford? And if it's $2,000, you go, great, I can afford that. I've been wanting to keep it around 1,500 anyway. That's awesome. If you've been looking at homes or talking to people and you think your payment's going to be 3 grand a month, but you only qualify for 2,000, that is, then you may need to figure out some different ways to make something work, or look for a cheaper home, or see if there are other ways to qualify. So there are different ways and elements and things that you have to look at with this, and kind of dissect. But again, elementary, surface level, this gives you an idea on how to do it, how to do the math, and give you an idea kind of what ratio you're sitting at currently or in the neighborhood, and kind of what, payment wise you're looking at, and if you fit into that box. So if you'd like this calculator, shoot me a DM or comment and I'll shoot it over to you. Be glad to share that. It's very simple to put together. If you'd like to chat about this, reach out to me, chad@chadwickanderson.com. Visit my website. All my contact information is there. Drop something in the comments. You can text me. You can do all those different things, whatever is good for you. But reach out to me. Would love to help. And if you can help on this channel, if you would do me a favor, like, subscribe, follow, hit the bell, DM, comment, all those things that help the algorithms and the equations and whatever, these social media platforms have. Visit me on the other platforms as well at This Chat Is Real. Thanks for hanging out. Thanks to those of you who have reached out, and a few of you that I've talked to and actually been working towards helping, either answer questions or put you in a good loan or a good home for you and your family. So hope this helps. Thanks for hanging out, and we'll catch you on the next video. Take care.